very, very invested in our community.
It's wonderful to be here.
This is Vinney Chopra and also my good buddy Beau. And we are so happy.
It's amazing what's going to happen. So, we amped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
Oh, I know.
So excited to come live to you all. You live 9:30 every Friday. How to take your business to the next level.
Good morning, and good morning, America. All right, we are back. I know we were gone for 2 weeks. Is that right, Beau? Beau,
Yep.
my brother right there from Las Vegas, and Vinney Chopra from here in San Francisco. We are so excited to be with you. Again, we come live to you, Vinney and Beau show, Friday at 9:30 Pacific. 9:30 Pacific. So thank you again for joining. We're going to be talking today a little bit more about recession that is going to be, and the inflation, of course, and how the interest rates are going up. There is a buyer's market coming. After a long time, it's been a seller's market, but it's going to become buyer's market pretty soon. I hope you're ready with the money, with the equity, so that you can jump in. So, Beau, how are you, brother? So we can talk about Iceland. We just returned from Iceland, and it was such a great trip. Go ahead, Beau, brother. Yeah.
That's awesome. Yeah, I'd love to hear about your trip. Yeah, it's interesting times right now. We're starting the what's really going to start the kind of downward spiral is the June existing home sales. That comes out July 20th. So right now, May sales were actually pretty strong. There was nationally 5,410,000 units sold. So that when June's comes out, it's going to be the kind of spiral down. So anyway, Vinney, that's you can hear it on the you can hear your call on your phone. Yeah, it's loud.
You probably asked this. So I think I encourage that, Raghu. I want to thank you.
I apologize.
Oh, no worries. I just want anybody who plugs in so they don't.
I know my one meeting went into another meeting. So sorry, everybody.
So, anyways, July 20th it'll start a little bit of negativity in the media. They're gonna show that inventory's up significantly. It's interesting right now. I think I just read something that Phoenix's inventory levels are up 113%. Austin's 145% for median home listings. And basically, housing is less affordable in 97% of the markets nationally. So that's kind of a given. The cost of owning a home is the highest since 2007. So those are kind of the indicating factors that you're going to see. Like in Las Vegas here, we're seeing more inventory come on the market. They're still relatively low even when this comes on. So I think it's going to trail, but it's going to have a trickle down effect for what's going to go on. But yeah, I definitely think we're in for a little bit of a transition from a seller's market to a buyer's market, which will create some opportunities. So I'm excited for it. So anyway, what's your take, Vinney? You're on mute, by the way. Oh, Vinny's on mute. Okay. Anyway, what else did I discover, everybody? I don't know. Vinny's just doing something on his phone right now. This is another huge stat. What did I pull up here? The 6 months of this year through Thursday were the stock market's worst first half since 1970. So definitely interesting times. Vinney is on another call, and I'm hosting the meeting. So sorry if I'm flabbergasted. So anyhow, so what's my take on it? I think we're going to have a transaction slowdown. So we're going to have a slowdown with transactions. So that'll probably be anywhere from like 25 to 40% in the amount of home sales, transactional. I'm talking residential right now. So that will have a trickle down effect, which means, the mortgage brokers of the world, we're starting to see layoffs in the larger mortgage companies. The Redfins of the world are laying off. So all these signs are just, listen, the market appreciated so much over the last, it was so hot for the last 2-3 years, especially during COVID, where during COVID, I think we saw average home equity gained from Q1 2021 to Q1 2022. So in that 1 year time period, the average home equity gained $64,000. So it is significant. And so I think we're going to give a little bit of this appreciation back because it had to happen. I was surprised that we've had such a bull run for as long as we did. I do think it's going to create a huge opportunity, not only for first-time home buyers that are able to take advantage of FHA, VA. They'll actually be able to get housing. There's still a pent-up demand, especially within the millennials. So definitely interesting times we're going to face. I think right now, based on some conversations I've had with some pretty successful people that I take their advice from, everybody says, you should have reserves stacked in your bank. You should have some dry powder. You should only buy very good deals right now. Don't push any deals. Be very selective. Stay up to date on what's going on. You should borrow as much debt as you can to hedge against inflation. You should go out and get credit lines and use them when there's opportunities that strike. So that's kind of the basics of what I think is the feasibility of what to do in this market. I don't know what Vinny's doing still, but that's kind of my take. If you guys have any comments or questions, feel free to post them down below. But once again, I do think July 20th, that's when the National Association of Realtors comes out with June's existing home sales. And then on Wednesday, July 27th, they come. NAR is National Association of Realtors. They come out with June pending home sales index. So July 20th will be the day that the media picks up, and you'll see some news, and that's going to create some fear in the market. And I think that will definitely kind of make things freeze. I have seen some posts from brokers real estate brokers that in certain markets, like showings are down by like 80%. So new home sales, same thing, a lot less traffic. But this is what, they needed to do to slow the economy down. Personally, I don't know why they didn't start raising rates earlier on so we'd have more of a soft landing. But, I'm not that high paid to understand why they're doing that or what they're not doing. So I think right now is the time where, we adapt and you figure out where the buying opportunities are. And that's kind of my goal for myself and for my clients that I finance their properties. Currently in the real estate financing market, I'm rambling on, but anyway, I'll just touch on financing. There's still abundance of capital. Lending guidelines are getting a little bit more conservative, especially in the STR or the short-term rental space. Short-term rentals, they're going to get LTVs for these DSCR loans, so the debt service coverage ratio loans, the non-agency type of loans. They're cutting back on short-term rental lending right now. So you're going to have hits to your LTV. Rates have gone up, obviously. So I think they're going to be a little bit more conservative in these vacation areas where people were really kind of gung ho, and there's been an enormous amount of people wanting to get into the vacation rental industry. So I think you'll see some major pullback there. As far as iBuyers, the major iBuyers, I have a friend that sells to these iBuyers, and I just saw a post from him, and he said that 3 of the major national home buyers, these iBuyers, have halted all buying. So very interesting times. But the good thing that we have going right now is that the national level of equity that every homeowner has is very significant. I think the average equity is like over 40% or greater. So that means homeowners are in a much better position. I don't think people that have 2 to 3% money on their existing homes are in any rush to sell. So you're not going to see as many move-up buyers, because why would they want to jump to 6% when they have a 3% 30-year fixed? And that's kind of, if I look at myself personally, I've been thinking about buying another house to get a little bit bigger property. But then I'm like, well, I got 3% money, and then I'm going to go to 6% money, and then I'm also going to be buying up. So the move-up buyers probably aren't going to happen. So that's why we're going to see a transaction slowdown, significant transaction slowdown, which basically means that the mortgage and real estate professionals are going to take a pay cut over the next 12 or 18 months, most likely. I think construction will fizzle out. Renovations of homes will slow down. People are going to be a little bit more conservative on what they're spending their money on. So I think that's, the outcome of what's going to go on. I do not think this will be nearly, I don't really think this is going to be a real estate type of crash like a lot of people are predicting, but I do think we will have a pretty good slowdown. But I still think that rents are going to stay pretty strong, and investors will adapt and buy property. So I think that's really what's going to go on. So anyways, that's just my feedback. I don't know what Vinny's doing. Kind of the stats I was looking at that are pretty important. I'll go over them one more time. So next GDP is September 30th, which I think we'll see a big slowdown there. May home sales were strong, 5.4 million. May 2022 medium existing home sales, the price was 407,600. That represents a 14.8% increase from a year ago. Bitcoin is down from 30,000 plus to about 19,368. Housing affordability dropped sharply, even as supply has jumped up 19%. Housing is less affordable in 97.
I am so apologetic
No.
to the audience today. Oh my gosh. Beau, so let's talk about it, brother. Again, my apologies. This meeting was supposed to be a little bit earlier, but it didn't happen, and got started a little late. Beau, so, let's just catch on, brother.
Sure.
Are you with
Yeah.
me?
Yeah, I'm there. I basically went over all the stats I pulled.
Oh, wonderful.
The
Yes.
past 6 months through Thursday were the stock market's worst first half since 1970.
Wow.
Next GDP is coming out September 30th. We'll see signs of a big slowdown. May home sales were actually strong in the residential space. May 2022 medium existing home sales price is 407,600, represents a 14.8% increase from a year ago.
Wow.
Bitcoin's at 19,368. Like last month or a month and a half ago, right? It was like 32,000.
Wow.
Housing affordability dropped sharply, even as housing supply jumped 19%. So affordability is still going up. So we're seeing all these things going on right now.
And basically, one of the factor, Beau, is that our government printed $3 trillion of money, paper money, in the last year and a half. Or let's see, all that money is flying all over. And that's where the purchasing power is where it is. And people are not feeling the scarcity. I mean, we are paying gas at $7 here in California, in San Francisco, just because people can still afford. But with this inflation, it has to be curbed. And that's why interest rates are going to be rising even higher. But you know what? the thing is, those people who are always thinking about opportunities, this is the time. It's coming. It's coming. You got to get yourself ready, bootstrap, raise the money, or get your equities ready, because foreclosures are going to be coming. Lot of great opportunities in all commercial sectors will be coming,
Yeah. I mean, this is where another transfer of wealth. I mean, that's what happens. There's cycles.
Yeah.
And you should always have 6 to 12 months of reserves in your bank account. You should never be fully leveraged. You should right now you should be talking to investors, raising capital, or at least opening up doors, because there's going to be opportunities, and that's where you take advantage of it. I mean, there's so much doom and gloom. I just read a bunch of doom and gloom, but really, the fact of the matter is, it's like you got to be able to
When
ride
the
the
doom
waves.
and gloom comes, that's when the opportunities come. I mean, look
Oh,
at, our good friend from Nebraska, uh, Mr. Buffett, right? I mean, what he has done and built his whole nest egg is on all these companies. When they go down and the profitability decreases and all the doom and gloom, when you come and buy and then turn them businesses around, right? Same thing is true in, real estate. Opportunities are going to be amazing, amazing. What happened in 2008 was different. It was a different crash. Now it's a different crash. There is not a really, really that much difference, in the sense rents are going higher. They may not go that much higher, but the interest rates are getting to be 2018 level, or we know the interest rates even 7, 8, 9%, level before. So by underwriting correctly and looking for those nuggets, who gets the nuggets? People who are in the market, who are staying. But if you go and close your eyes, then opportunity is going to pass by, right?
Oh yeah, yeah. I mean, I think it's still a great time to buy deals. You just have
Yeah.
to price in the. I just put a verbal offer in on a property that I looked at, and it was here in Las Vegas,
Yes.
and they were asking 680. I knew there was some flexibility, and
Yes.
I offered 580, and they said, "Oh, we're a little bit too far off." But it just went pending. I think about 40 grand lower than the 680, so it's 640. But I have a feeling it's going to come back on the market. So like the whole idea is like you got to be have your eyes open and be looking for these deals, because they're all over. And so I don't, even though I was in real estate during 2007 and it wasn't a good experience for me, it was painful. You got to learn from the mistakes. I didn't have any dry powder. I didn't have investor relationships like I do today. I
Mhm.
didn't understand market cycles like I do today. So, the people that have been around are more excited now, because they know
Yes.
it's gonna get a lot of people out of the real estate world that just kind of
Yes.
made the quick money, and
Yes.
they're gonna be
Yes.
out of the business quickly. A lot of these, people that just started buying real estate in the last 3 years, they'll be gone.
True. So
Um, and if you're out there looking for deals, that's where it's gonna happen. And just be patient and know what you want to buy. Don't push. There's no reason to make your offer, and if they don't take
exactly.
it, move on to the next one, and then come back to them in a month and go, all right, did you sell your property? No, I didn't. Okay, great. You want to negotiate now?
I want to share something very exciting that happened yesterday with us. We closed on the deal in Houston, about $65 million deal. But the Arbor reduced the loan day before yesterday by 1.5 million. What? They were going all the way along. We are ready to close, and they said 1.5 less. And we had raised, 19 million, right? And everything. We went to the seller. Market is changing so drastically. They reduced the price by 2 million in 1 hour. What? The
Yeah,
seller closed the deal at 63 million. They didn't want to take the chance of having somebody like us who could close on it right away and then get into the process of bringing the property back, because the seller market is changing into a buyer's market now. It's going to take a little time in all these emerging markets and all that, but I'm just telling you, that's a live example of what happened yesterday. And we are
yeah,
so fortunate, that the people are, willing to adjust, because it's been a seller's market. Everybody wants top dollars. I wanted, which I got, 4 million sent to us for the $63 million deal, which we are selling in Austin, right? I mean, we sold at the peak. We sold at the very best peak, and they're assuming our loan. Yeah, yeah.
So when that'll close soon?
Oh, that is going to close. Lakeside Renaissance. I would Lakeside Renaissance. Yeah, Park is going to close in 45 days. So the Freddie Mac has their application and everything because they're assuming our loan of 2.89%. What? In this market of 5.5, 5.25, they're getting a great deal. That's why
Yeah,
it's wired 4 million because
you're
that's
gonna see a lot of this happening. You're gonna see
it
a lot
will.
of assumptions, especially in the multifamily, where they make
Yes,
assumptions a little bit
yes,
easier than in residential. I
yeah.
mean, now it's just being creative and also not being don't be too greedy, right? Like the guy or the business that sold you the apartment complex, they were smart
Yes,
for reducing their price because if they would have
totally.
put it back on the market, what if they would have? What they wouldn't have had the same buy. You were ready to
They won't.
go.
They won't.
So
It would have
so
gone down by 5 million or 3 million. I don't know.
yeah, they left some meat on the bone for you, and they've
Yes.
done very well since they've owned the property. So, like what's the saying? Pigs get pigs get fat, hogs get slaughtered.
Yeah, yeah.
You always gotta be um, willing to negotiate, right? And I think you have to have difficult conversations. You have to communicate with people. This is how you make money by
This is
communicating
it.
difficult things.
Totally.
Like, hey,
Opening up and asking. I mean, many times we always keep in our mind, no, he's not going to agree to that or she won't agree to that. Our life goes by when we don't ask. I mean, the one thing which everybody can pick up from our conversations is that you got to ask for business, always be closing ABC, always be closing ABCs of selling, and purchasing is always be closing, and win-win-win situation. See, you cannot take anybody for granted. You got to have them win it also, and you win also. That's the
what's your son's take on what's going on with crypto and
you
currency? I
know.
mean,
I
everybody's
mean,
taking a big
I've
haircut, but
lost a lot of money. I'm just saying it on the platform right now. I lost my Luna money, almost 300,000, whatever I had. Then my other one. And of course, Ethereum is down and Bitcoin is down and Rune is down also. So, I've just kind of given up on these coins and tokenization and all that stuff. It's crap. Sorry to say that. But I think Bitcoin is going to survive and Ethereum is going to survive. Celsius is gone totally out of they've frozen that also now. That was the staking of the Bitcoin and staking of the Ethereum. I think these people don't know how to take money, collateral, and invest into some good, solid investments. So they made some bad judgments. That's why Celsius is in trouble,
yeah,
platform. Yeah.
yeah, a lot of the people that were over leveraged in those in crypto just, I
Yeah.
mean, it's down 60%, right?
Sure. Look at
Or
that.
more. I mean
Um,
yeah. So that's why
Devastating.
you
Hmm.
need you need diversification no matter what. You can't just be in all multifamily. You can't just be in all owning hotels. You can't
Exactly.
own all storage because things cycle. Let's
Yeah.
face it, things cycle. You
Yeah.
have to be able to weather storms.
Yeah.
Weathering storms, real estate is always, in my book, is the best investment out there long term.
Yeah.
Real estate always will be. The people that get hurt are the people that can't weather storms. Like in
Yes.
2007, 8, I didn't know what a storm was. And
Hmm.
then when that happened, I was like, oh, this is terrible. I didn't have reserves. I didn't. But if you set yourself up, like right now, you should be, in a sense, getting your cash ready and be looking at deals. Like hoard your money, but be ready to invest in the right opportunities when
I
I
love
mean
it. I
that
love it.
and then talk to other people that have dry powder that want to do deals with you. There's lots of people. If you network
Yes.
in the right circles, a lot of people have dry powder in those circles. And then
So true.
also, what can you be doing? Like get some, get credit lines in your businesses. That's what I do. I have, every new bank account, I usually get a credit line.
Yeah.
So I'm ready. I'm ready. I have a lot of free and clear credit, got some cash. So what are we going to buy? I don't know yet, but we're going to be looking, we're going to be talking to people, we're networking. not burying your head in the sand, right? Like that's the worst thing you can do. In 2008, when all that happened to me, I would just buried my head in the sand. I was like, I don't know what I'm going to do.
Yeah.
When I should have said, okay, we can quickly get out of this. Adapt. What do you do? I was selling houses and stuff. I should have become the short sale and foreclosure person. I could have been signing contracts. You can make money in any market. It's just it's all mindset, Vinny. It really is. And it's amazing if you go on YouTube, these doom and gloom people, like, I don't know, it's kind of funny. They just want people to watch their videos.
Yeah.
And I find it kind of interesting.
Be very careful. Be very, very careful. I mean, you can watch this video. You say, oh my gosh, okay, I should do this. You watch another one, contradictory. I mean, there is so much fluff going out there. I just found out one of my investors, she says, oh my gosh, that NERI or something filed for bankruptcy, $500 million Ponzi scheme. Look at that. They raised so much money. They were promising 20% returns. And then, so please be very, very, very careful who you are putting your money with. It's so important. I think maybe at that junction, we should wrap it up. I know I have another meeting coming up, Beau, but thank you, brother, for taking care. If you like this content, please come back every Friday, 9:30 a.m. Pacific, 12:30 Eastern. And thank you so much for watching today. Sorry for all this mix up with my going for the Elevate. This is a big multi-million millionaires who are 28 of them were there actually in this one. I've been brought as a guest into that deal, to teach and share and maybe, share my ideas in that mastermind group, which is a very high caliber group. So I'm very excited to be there,
Right.
But
we'll
thank
let you go.
Huh?
All right.
Thank you,
We'll
brother. Talk to you,
soon.
everybody. Bye-bye. Bye-bye. Morning, good morning, good morning. Thank you for joining this morning. This is Vinney and Beau show. Some of you might know me, Vinney Chopra, and my partner, Beau Eckstein. And we come to you live at 9:30 Pacific, which is 12:30 Eastern, every Friday. Thanks for joining.
And I think, Vinny, honestly, we at some point we're going to start a affordable housing multifamily division underneath Monale Investments. I'll run the division. We'll have a nonprofit component, and we'll help.
Wow.
We could probably help this in a big way, really.
I would love that. I would love that.
Yeah.
It's been an exciting week. I hope it's been for you also. Beau, you have some questions, but
Oh yeah, I got a lot of questions.
How are you, brother?
Good to see you, Vinny. Good to see you, Beau.
Oh, thank you. We are so privileged to have you.
Hey, Vinny, real quick.
Yeah, bud.
All right, I'll bet you sushi that you don't know what does SAS stand for?
Hi there, everybody joining us, watching us. We are live in 7 channels actually today in the YouTube, in LinkedIn, in Facebook groups and Facebook. Thanks again for liking the show. Please give comments, share, and we are here for a very big show today.